everyone, welcome to another episode of the Mizuho Week Ahead. I am Jing Yi, market economist at Mizuho Bank. The theme for this week is Digesting Data, People, Policy. Last week was a week of digesting uncertainties on multiple fronts, from data, people to policy. The week started with markets digesting the dismal NFP print in a reassessment of rate cut prospects, for which the odds of a September rate cut has risen to 84%. Underperformance from the US ISM services also cast doubts on the strength of the US economy, but the sight of higher prices paid also meant that markets had to ponder stagflation fears. Meanwhile, personnel-related matters were also grabbing headlines. First, the removal of the BLS commissioner triggered fears around the objectivity of economic data and integrity of policy making. While there is damage to institutional integrity, well-entrenched institutional process may still overcome worst cases of politicization. On the Fed front, Trump's pick of Stephen Miran to temporarily replace departing Fed Kruger is not an imminent threat to the dollar, given his acknowledgement of the need to retain the dollar as the undisputed global reserve currency. On the tariff front, there was much confusion in Japan over the stacking of universal tariffs and auto tariffs, for which the EU benefited from the stacking exemption. For now, Japan has confirmed that the US will end stacking, though the time frame of implementation has not been agreed. In India, the RBI kept rates unchanged while maintaining their neutral stance amid lower inflation projections, with Governor Malhotra leaning on ongoing transmission from front-loaded cuts to support growth. Attention, though, remains firmly on US-India trade spread, with India facing sharp doubling of tariffs to 50% from 25% due to Russian oil imports. In Asia, Vietnam's data release indicated slower industrial production growth for July, even as exports growth remains firm. Meanwhile, headline inflation slid lower to 3.2% year-on-year. Price pressures, though, remain strong, given that much of the decline was driven by downward revision in petrol prices, while core inflation showed a much smaller decline to 3.3%. Elsewhere, Indonesia's Q2 GDP defied expectations of a moderation, posting 5.1% year-on-year growth on the back of robust consumption and investment spending. But reports of mass layoffs and consumers holding back spending is unlikely to allay growth woes, especially amid job subsidies and discounts to support growth. Meanwhile, Philippines' Q2 GDP came in at 5.5% year-on-year, supported by an acceleration in services activity, although manufacturing activity moderated. While domestic spending was stable, it is unlikely to provide sufficient support for growth in second half this year as tariffs come into effect, and Philippines may still miss the growth target of 5.5 to 6.5% that was recently revised lower in June. Looking to this week, we have RBA decision on Tuesday and Bank of Thailand decision on Wednesday. We expect the RBA to proceed with a 25 basis points rate cut, as the quarterly CPI print was largely in line with the RBA's expectations, although we expect Governor Bullock to continue striking a cautious tone of a calibrated easing cycle. Meanwhile, the Bank of Thailand is expected to cut rates by 25 basis points amid various growth soft spots in both the tourism sector and the manufacturing sector, despite robust, resilient export demand. All in, policy looks set to provide support for the economy in the week ahead, and markets will yet again need to look at the US inflation print to determine the impact of tariffs on inflation. With that, we have come to the end of this episode. For more information on the key events for the upcoming week, please refer to our Week Ahead publication or contact your respective sales desks and RMs. And for regular notifications on our market views, please subscribe to our channel and hit the notification button. Thank you and bye-bye.